Welcome to the All Things Wildfire podcast, where we delve into the latest trends and hot topics in protecting properties against wildfire. So sit back, relax, and join us as we arm you against disaster.
So welcome everyone to another episode here, and today I have a very special guest, especially with regards to what's going on with in the news right now with State Farm. And let me just share a little bit about who I'm about to introduce. She has quite a bit of experience. She was an underwriting supervisor at State Farm years ago, then public relations manager at Allianz Group, and then director of strategic communications at the Insurance Information Institute. And now with over 30 years, it looks like, of experience, it's my pleasure to introduce Janet Ruiz of the Insurance Information Institute. So did I miss anything there, Janet? Okay, awesome.
You got it all. Thank you.
Well, thank you. Thank you for joining us. And, we with this whole situation that's going on with State Farm, you had mentioned that you've taken calls every 30 minutes this Friday. Can you kind of talk a little bit about what's going on? And were you surprised? Were you caught off guard? Or did they give you a little bit of a heads up this was happening?
Well, what I would like to talk about is what's going on in the insurance industry and what many companies are doing in California. So we've had severe wildfires since 2017 that actually wiped out 20 years of underwriting profit for the insurance industry in California. So all the insurance companies have been looking at how they're managing their risk. How many policies can we have in a certain area, especially in these wildfire risk areas? The reasons that insurers are looking at these things are, wildfire risk has increased. We used to not see homes burning. We saw a lot of forest fires years ago,
right,
but not the numbers of homes and businesses burning down. So that's where we come in, because we're the financial first responder that pays the claims and helps them get their building built again, their home, their business, etc. So 2017, we really started seeing the change and the more buildings in harm's way. Right. People have moved out of the urban areas into the wildland urban interface. So this is why we all have to look at the risk and manage how many policies does each company have in a given area. And each company does that themselves, and they take different steps to manage their risks. So we've seen some other companies, a couple of publicly traded companies earlier this year dropped out and stopped writing. We've seen many companies non-renew certain numbers of policyholders in wildfire risk areas. And then we've seen others who maybe they're keeping their policyholders that they have, but not writing new policies.
Right.
So all of these are strategies to shrink the amount of business to manage the risk. Now, why is it hard to insure this risk? In California, we have Prop 103 that came into play in 1988. And Prop 103 said you can't use modeling like forward looking. You have to look backwards at historical loss when you go to make rates. Wow. You can't use reinsurance. So each insurance company buys insurance as well. So, if I'm an insurance company, I say, well, I can handle $20 million worth of risk. And this is on an annual basis.
Right.
And then I'm going to buy reinsurance for 20 million on top of that. And then, if we have a big wildfire or a bunch of wildfires, then I will be able to pay my claims. And that's the responsible thing to do. We haven't seen companies going insolvent in California like we have seen over a dozen in Florida in the last year or so that went insolvent, so they can't pay their claims. We only saw one small company go insolvent during the Camp Fire, which, 18,000 homes burnt down. And it was a very small regional company who had insured too many properties in that specific area. So it's important for us to manage the risk. And then the other thing that we in the insurance industry, along with the Department of Insurance and many other stakeholders, the building industry, the fire services, the land planners, are all working on real mitigation efforts, community-wise and home, specific parcel-wise. We had to get to a place where we had scientific standards that really do keep homes and businesses from burning, or at least very resistant to wildfire. So these are some of the issues we've been facing. This has been ongoing for a few years, and companies are taking steps to protect their policyholders that they have, pay the claims for, the people that are on their books. There are a couple of resources for people in the very high risk areas. If they can't get insurance with one of the standard carriers who is admitted and licensed with the Department of Insurance in California, they do have the option to go to these surplus lines, right, specialty carriers who aren't regulated. Really the problem with the insurance in the regulated market is we haven't really been allowed to charge the appropriate amount of money for premiums.
And Janet, let me hit on that. Like, there's a lot of things you just said that I want to ask you more questions. But on this specific topic here, I think people need to realize that when you are working with the Department of Insurance, and you're an AIG or a Chubb or a State Farm, you have regulations that you have to abide by. Where my understanding is you could ask for rate increases, but you have to go through a process okay, and then there's a limited amount that you can ask for every time you ask. But the reality is, in the E&S side over here, like, they can charge all the way up here. But if you're a company that's working with the Department of Insurance, you're almost stuck here, and I feel that's kind of unfair. And I think that, like, this is maybe where the Department of Insurance and the commissioner need to get together with the big carriers to figure out, like, what can be done here. Because if the rates have to increase, we get it, they have to increase, but it feels like they're being blocked almost. Is that appropriate to say?
Well, I would say the regulatory process needs to be modernized, especially the effects of Prop 103. So the reason why it's artificially kept rates low is a few reasons. One is the intervener process, where anybody can come in and say, we don't agree with the rate increase that company A filed with the Department of Insurance if it's over 7%.
Right.
So companies only put in 6.9% increases when in fact maybe they needed a 23% rate increase. They also, under Prop 103, don't let us use the modeling information to look forward what's coming. We can only look back historically what happened in the rate making process. And then the third thing is insurance companies have to have reinsurance, and we're not allowed to use the amount of money that we're spending on reinsurance as a cost in the rate making process. So in California, the average insurance policy, homeowners, costs $1,300. In Florida, the average insurance policy for a homeowner is $4,000.
Oh my goodness.
In other Western states that deal with wildfire, it's more around $2,000. And of course, this is the average, but it's indicative of the problem because California is expensive to build in. We all know we're all dealing with, if you've done a remodel, it's a lot more expensive to get the contractor, the supplies. So that's what insurers are, insuring for. If your house burns down, they're going to rebuild it for you. But that and mitigation. So mitigation would help, have us have less homes and businesses burning. It's a process, and it's going to take a while to really get places more resilient, but we're certainly in the middle of working on it. But we need to be able to charge the right premiums. Then you wouldn't have to be with California Fair Plan or a surplus lines. So when people hear we need to increase premiums, they get upset. If they're in a high-risk area, they're not with an admitted carrier, they're thinking, oh no, you can't raise it any more than what I'm paying. However, if they were able to come back to the admitted market with the standard carriers, it probably would be a little more affordable. If you're in a high-risk area, you're still going to pay more than somebody who's not, because it may burn. And we know that. But again, all these things have to come together so that we, as an insurance industry, can insure more properties in California and certainly keep it a healthy insurance market, competitive.
Got it.
So far, we've done okay, but we're kind of on the brink because we need these things to take place.
Yeah.
We need to include reinsurance. We need to include modeling. We got to look to the future, not backwards. And then mitigation, of course, is key.
Now, Janet, I'm going to share my screen here really quick. Are you able to see that? Let me see.
I am.
There it is. Okay. So this is from the Department of Insurance, right? Where it's safer for wildfire. And this is Commissioner Lara is saying, hey, this is what we put out there for insurance companies and for homeowners to understand that if they were to do these three things, then we can, we have a list of vendors of admitted carriers that would be willing to sign them up for policies. And it's number one is, protecting the structure with Class A fire rated roof, maintain 5-foot ember resistant zone. Really, some of the things that people can do on their own, which I think is fantastic. And then we have protecting the immediate surroundings. Now we have vegetation management. And then we have this community piece where the community really needs to work together to minimize their exposure. And when I look at this article and this proposed situation that the commissioner has put together, it shows here that, here are the insurers that are willing to offer discounts is what it says here. And so we can go down here to State Farm. State Farm's here, but they're no longer here, right? So where did I see them? Here they are, right here. So they decided, hey guys, this is too hot for us, right? No pun intended. But it's the profitability doesn't make sense, and I completely get it. I think what you just explained, especially about Prop 103, absolutely. A lot of the listeners don't realize that some of these carriers, unfortunately, are tied up like a mummy, and they can't really do things, or they have handcuffs on. There's not much they can do, and so they've got to exit the market. And now, us homeowners are having to deal with E&S and figure out, okay, we have to pay higher rates. But going back to this list here, Janet, do you know if these carriers are offering any discounts at this point if the customer is doing this work?
Well, I think the important thing to understand is that they haven't exited. They have maybe shrunk their books of business in many of these companies.
Got it.
So we have actually been fortunate to keep all of them. And the important thing is that they may not be able to write new policies, or they may have to non-renew some, and some companies have already been doing that. We hear about that quite often. But if they are listed as someone who offers a discount and you have a policy, then you would get the discount. This process is really in the middle of transforming because the Department of Insurance required all the insurance carriers that are admitted to file a new rate structure with them on April 12th. So we're just here at June 1st. As we know, the approval process takes a while, and there are also 116 companies that are admitted licensed carriers. Part of what they asked insurers to do is give discounts. There are many really good wildfire programs. Wildfire Prepared Home is one that the Insurance Institute for Business and Home Safety put together. It's comprehensive. It's very, if you do all the things that they have on their requirements to be certified as a wildfire prepared home, your company, your house is going to be much more wildfire resistant. And then the community wildfire programs, we know, Fire Safe Councils, Firewise USA. I understand the Department of Forestry has one. CAL FIRE goes out and does inspections.
Right.
There's a lot of community work being done, all of which is great. So discounts aren't really the most important part of it, but they certainly are incentive, and they get people to do more at their home site, and they can be certified. The wildfire prepared home, you get certified every 3 years. These are all great programs, and we highly recommend that people pay attention, understand their risk, and prepare, for every season. It's a yearly thing.
And Janet, it sounds like anytime, and thanks for clarifying, I know State Farm didn't leave, they just are not writing new policies, but anytime that an admitted carrier does something like that, I think it sounds an alarm for us homeowners, almost like a wake-up call to understand, hey guys, we have an issue, and we have to begin to take the responsibility of risk ourselves for our own property to help the carriers extend coverage. And so I feel like it's a cry to the public to say, my friends, do your part, because in order for us to work together in harmony, where the insurance carriers are able to pay claims, then we have to be able to do our part. Would you agree with that? Is this a time for the homeowners to really kind of wake up and say, hey, let's do something about our own mitigation efforts?
Well, I think we've been talking about, mitigation and homeowners being responsible and managing their risks for years. We do this all over the country. Florida, Louisiana markets where they have a hurricane, every year. They have to prepare. Earthquake, is also another one we have to prepare for. Flood. So, I think the insurance industry has always been promoting it. I think the public is taking more notice, and especially in California and with the severe wildfires we've had. And this year we had this really wet winter. Yay, the drought's over. But but we have more fuel for wildfire. So I think communities, I can name a few, but I know like the Moraga Arinda community, their fire chief, Dave Winokur, does an amazing job helping them understand how to prepare for the risk and incentivizing them. So homeowners associations can also be a really good incentivizer. In the one I live in, you have to clear your land by June 30th, or you get a penalty.
You get a fine.
So, these things are all very important. And the community itself does a lot of land clearing and makes fire breaks, etc. So yes, it's critical. We love Fireways USA. They've been promoting this for years. They're national. They help people organize. It's kind of like Community Watch, except it's Firewise and Let's Prepare. So these programs are all important. The Fire Safe Councils get grants for things like chipping, so that people will manage their trees and those risks. What the other thing that I think is really getting people's attention is on the real estate market. If you go to buy a house in an area that's got wildfire risk, they're telling you to get your insurance before you come to closing. It used to be kind of an afterthought. Oh, we're closing. Is there an agent down the street? Get some insurance. Not so in these wildfire risk areas, because they know that it won't close. You can't get a mortgage without insurance unless you find that policy first. So we recommend people shop and compare.
Right.
Talk to your local insurance broker or agent. They'll know which insurance company has capacity right in the area you live in. And if it's very high wildfire risk and you can't get insurance, you can always go to the California Fair Plan. It is run by the insurance industry, and supported and funded by the insurance industry. It is a basic fire only policy. So you have to get an extra policy that would cover things like theft and liability. But it is a fire policy. And if you live in a very high risk area right now, that may be your only alternative. But it is an alternative. Not
Very
every
true.
state has that. And I don't think people understand that.
And I began to discover that, Colorado, I don't think they have anything going on like that, and they're desperate. And
they're working towards it.
Fantastic.
They have that in the legislature right now. Yeah.
Yeah. And Janet, I know you're pressed for time, and I really do appreciate you jumping on really quick here. In closing, what would you believe to be the thing that needs to happen for us to have harmony again, knowing that we've had all this destruction over the last 7, even 10 years, and there's happens to be this imbalance between the Department of Insurance, the insurance carriers, the homeowners? What would you see to be the next step of what you would like to see happen to kind of regulate this again?
Well, I would really like to see Prop 103 modernized. Let insurance companies charge appropriate rates for the risk. We will see how inflation goes and building costs. Of course, it would be great if those come down a little bit. And then we need to be able to buy reinsurance, and we need to include that in our costs. On the homeowner side, I think if people take the risk seriously, they learn to live with wildfire and learn how to prevent their home from burning or their business from burning, then I think we will, go into the future with a brighter future in our sights.
Boom. Janet, thank you so much. So very well said. I love that the idea of this ability to kind of re-regulate this situation, and any support that you need from us, please let us know. We are your cheerleader, your advocate, however we can support you to get this message across, or whatever efforts that you put forward. We'd love to be a part of that. So, Janet, thank you again for joining us, and we'll talk to you soon.
Thanks for having me.
Take care.
That's all for this episode of All Things Wildfire. If you like this episode, be sure to subscribe to our show and follow us on social media to stay up to date on all things wildfire. And as always, thanks for listening.